Hi there. As a self-employed business owner, you may be paying unnecessarily high levies to ACC. What I'll explain is a very important concept for business owners to understand, as it can prevent financial devastation in the scenario that a key person such as yourself can't work due to serious illness or injury. Unfortunately, most business owners have their ACC plans set up incorrectly. ACC is an integral part of your financial backup plan, so I put this together to help you school up. I hope you enjoy. Let's first understand what ACC covers. If you haven't structured your plan differently with ACC, by default you'll be on the Cover Plus or Workplace plan. These plans pay you 80% of your taxable income in weekly installments if it's an accident that's pulled you out of work. It's important to know that these levies are buying you accident-only income protection insurance, and accident claims only make up around 40% of the reasons people can't work in New Zealand. ACC is one of the best systems in the world, but what they won't cover you for is serious illnesses or your body degenerating, which is where many people come unstuck. Whatever your line of work, serious illness and bodily degeneration are substantially more likely to prevent you from working than an accident at some point during your working years. Statistically, 1 in 2 people will be off work for more than 3 months at some point. So how does this work? If it suits your situation, I can help you restructure your cover with ACC to what they call Cover Plus Extra. Firstly, Cover Plus Extra can help you save on levies. You can save on levies by opting the level of cover that you want from ACC, instead of them invoicing you an amount based on your taxable earnings for that year. Secondly, it adds certainty because Cover Plus Extra is an agreed value plan as opposed to an indemnity plan, which is Cover Plus or Workplace. This means you don't have to prove your earnings at the claims end, so you can skip the administration process and get paid sooner. And thirdly, it allows you to take on better quality private income protection insurance with the money you're already spending on ACC. Private income protection will replace your income for any reason you're unable to work, accident, illness and bodily degeneration included. It will also step in if ACC aren't paying a claim for whatever reason. They won't cover pre-existing conditions though. As an example, a 40-year-old male earning around 100k in a clerical occupation may be paying ACC between $1,800 and $2,000 a year. For a tradesman, you can pretty safely double that amount. What he can do is decrease his cover to the minimum or an agreed value amount and save himself money. Then he can reinvest those savings into private income protection cover. 1, he's going to save money, but 2, he's going to be able to cover himself for any reason he can't work, not just accidents. Please understand this isn't tax advice, but the cost of most income protection type products can be set up as a business expense. So at the end of each year, your accountant can put the cost against the business and claim your GST back, if you're GST registered, of course. Another factor to consider with income protection is that fixed price can be achieved. You should also be made aware that the reason most people don't have income protection is because they don't think it's affordable. It's usually deemed unaffordable because the premium's been structured like the blue bars, which is not sustainable to most incomes as people age. Most income protection, critical illness and life insurance owners in New Zealand eventually have affordability issues because they have their premium structured incorrectly to their long-term needs. So feel free, if you feel like you're in this situation, to let me know and I can assist. The red fixed rate price keeps the cover affordable right through to retirement, so you aren't forced to cancel it before your high risk, higher claiming years. The cost difference over the policy lifetime is substantially less between the two types of premiums, as you can see by the red arrow. There are multiple other ways to make your income protection costs meet your budget. If you feel it's important to have a chat and see if an ACC restructure can fit your situation, just give me a buzz. We can do a phone call, a video meeting, or meet for coffee. I hope you enjoyed this video and can apply the knowledge to your business moving forward.